Yo, full system strategy breakdown. So you don't have to buy a course. Alright, cool. So this video is for those of you that are already in the game, you get me. So for those of you that don't understand trading or you don't understand anything to do with this bullshit, yeah, but you want to get into it, please go learn the basics first, please. I beg you. Go learn the basics first. So you learn the fundamentals of price, you learn how price moves and shit, and then come back to this. I've already gave you the blueprint on my last video. Go learn and revise that video and come back. But this is essentially for the people that are already in the game, but you haven't really got your strategy locked down properly, or you can't really find a strategy that works for you. But don't worry, my bro, I've got you. This is my system that I've created throughout my whole years of trading, yeah? And this system has 3 strategies in one system. So as in, essentially, it's allowing you to catch 3 moves, yeah, in one session every single day. It's repeatable and it's fractal. It repeats itself and itself all the time when it presents itself, you understand? And for those of you that do trade, to really get a full understanding of this system, yeah, you need to already understand the core fundamentals of price. So you need to understand price action, so how candlesticks move, the meaning behind candlestick patterns, market structure, all of that nonsense. You need to understand supply and demand. So basically, the players in the game, buyers and sellers, you need to understand that. You need to understand institutional order flow. That's the key principle of this system, because we're basically catching institutional moves. So big moves, big swings from session highs to session lows. But if you already got clear understanding of that, I promise you the system, you're going to learn it in a heartbeat. But if you don't really understand it, I'm still going to break it down to you. Live trading this system, live trading. I don't do back test. I do it live, so you can see full and clear, you get me? I don't use bots, I don't use indicators, I don't use algorithms, I don't use none of that nonsense, brother. I don't use no EMA crossovers, no ADX, no RSI, nothing. I use strictly intuition. And you know what I'm saying? Like, bro, I've been in this game for too long, bro. Like, this is the only thing I know, brother. It's the only skill I know. Like, I live and breathe this shit. You understand? Like, I know this game like the back of my hand, bro. Like, you got to be obsessed with this shit for it to work, bro. When I tell you, bro, I'm obsessed with it, bro. You don't understand. That's the only thing I give a fuck about. So trust me when I'm telling you, I'm not doing this with views or money or whatnot. I don't give a fuck about that shit. I don't even give a fuck about TikTok, brother. I'm just doing this to genuinely help everyone that's on there come up in this game. Because I was just like you, brother. You get me? You're not going to see no flashy Lambos, all this dumb bullshit. I don't care about that. Because you'll get to a point in this game where you genuinely fall in love with the game. Like I did, bro. I am deeply in love with this shit, brother. I'm married to this game at a mad level. You don't understand. I don't even care about the bread in this game. That's just a bonus, bro. All I care about is price, bro. That's all I care about is the setups, bro. The money just comes, bro. All I care, bro. You don't understand. But yeah, you need to have a deep connection with the market shit to even get on this level. So don't watch what I'm doing in this game, bro. I'm at a point where it's like a video game to me now. You understand? Like, I can just go in and out, jump in and out, stack multiple positions like it's funny, bro. Because, yo, I've been, bro, it's just mad, innit? You get me? But it will come during time. You just got to spend your time and effort in the market to be doing shit like this in the markets, bro. Trust me. Just don't care about the money, bro. Only care about the system, bro. I've been through 4 strategies. Only the 4th will make me see real dope. You get me? And this is my 5th strategy, which includes 3 strategies in one system. So yeah, this shit is GTA to me, bro. You can even see how fast-paced my talking is, bro. Just because of how excited I am just to talk about this shit, bro. I promise you, this shit is the only thing I give a shit about in life. So, yo, I'm telling you now, I'm not no expert or no nothing, bro. I'm just someone that really locked into this shit to the point where it became everything I know. So there you go. So take it from me, brother, yeah? This shit is real. It will change your life, brother, yeah? Trust me. So yeah, follow my system, follow my strategy, and yeah, you're good. Believe me. So yeah, forget about everything you've heard about this game. Meme coins, pump and dump, all that bullshit, bro. It's nonsense, bro. I'm gonna show you what real trading is, bro. Real currency exchange, real foreign exchange, brother. Being able to predict price, because essentially that's the skill, bro. Being able to predict price moves before they happen. And that's what trading really is. And I'm going to show you this right now. Alright, cool. So the first thing I'm going to do before anything else is check the forex times. You get me? So you need this app. It tells you when the best times are to trade, because essentially you need to be trading session hours. Yeah? Don't be trading anything in between that. That's just noise. After that, you check the economic calendar, yeah? This app is gold. It tells you when there's news, high impact news. So you don't want to be trading on red flame days, and it's flames, fires. That don't trade them days. The impact of the news will just fuck up your positions, bro. It doesn't matter if you're on the right side or the wrong side. It can go anywhere it wants, left or right. It don't matter, bro. So you only want to be trading, yeah, low impact news days or no news days. So whatever currency pairs you're trading, you select on the thing what currency pairs you're trading, and you only want to know the news on that currency pairs. So Euro USD, you want to be selecting London.
anything JPY, so GBP, USD, JPY, you want to be selecting JPY, you get me? Vice versa, so you only select the countries that correlate to the currency pairs or assets that you're trading, you get me? So yeah, so this is what the app will look like when you've selected every impact news. So green, good, you're clear. Yeah, you can trade them days. Orange, a bit of techie in it, you get me? So just gotta be careful. But when it comes to red, don't even think about it. So only tick the red. Anything else does not matter. So tomorrow there's high impact news, 8 o'clock. 8 o'clock, so 8 o'clock London session. We're not even doing that. Fuck that. You know what I'm saying? We're not even gonna trade 8 o'clock. So yeah, you need that. It's essential. To make life easier for yourself, you ought to be setting alarms on your phone 1 hour and 15 minutes before session opens. This way, you've got a 15-minute warning to jump on the charts and start your analysis before volatility kicks in at the session opens, and you got an hour to do that. So cool. Now, you can't just trade any currency pairs. Like, you have to trade major currency pairs, like the ones on my watch list, the ones in red, yeah? Those are the ones that got the biggest moves, the higher volatility, and the ones that everyone is trading, yeah? Biggest pairs. You need them. Euro USD, GBP USD, GBP JPY. You can read and you're not spaz. But yeah, same for crypto. These are the most active volatile crypto pairs. Like look at this move on Euro USD. Big. These big candle moves, yeah. That's where the money's at. That's the money. You get me? So you want to be catching those moves. All right, cool. So enough of the boring shit. Let's just get straight into the analysis. All right, cool. So first thing you want to do, you want to go on the monthly time frame, whatever currency pair asset you're trading. You have to do it on the monthly. Go on the monthly first because you're going to see the overall picture of the market move. And from there, you want to back out your toolbox and then you want to mark your most recent resistance and the most recent support. Please do not use this box tool to mark your resistance and support. This is not an accurate way of marking support and resistance. This is just a zone. You understand? This whole area here is a zone. It's not a support resistance level. You want to be marking levels, not zones. Because essentially support and resistances are price levels, yeah? You see the price on the left? Those are levels. And these levels are the most accurate price points where price rejects and bounces from. So to accurately spot a resistance level is when you get a bullish open and a bearish close. You understand? Bullish open, bearish close. So this level right here, that's the resistance, the top of the candle, not the wick, the top. You get me? So you only want to be marking the most previous resistance. So that's the most previous bearish close. You get me? So you use a horizontal ray tool, you use a line tool, that you get the exact level of resistance. You get me? And when you use that tool, you want to be annotating it. And you're going to be doing the same for the most recent support, which is a bearish open and a bullish close. You understand? Not the wick, but the body. Yeah, that's the level of support. So once you've marked the most recent support and resistance, you want to be annotating it. You understand? So for the monthly resistance, you put MR. That stands for monthly resistance. And you do the same for the support level. So you do MS for monthly support. This way, you can see exactly where you are, no matter what time frame you're in. You understand? Because it's annotated. You can see it on the charts, no matter if you're on the 15 or the 5 or the 1 hour, you know exactly where you are. Now, this is your monthly range. You don't care what's here or what's here, you get me? You only want to be trading the price action that's inside this range. So anything that's up here or down here is irrelevant. You only care what's inside this range. This is your trading range on the monthly time frame. So now, if we zoom in on the weekly, yeah, I'm explaining the weekly time frame broken down. So the weekly time frame, as you can see, is the monthly time frames is in weekly segment. So one monthly candle, yeah, is 4 weekly candles because there's 4 weeks in a month. You get me? So using that terminology, you can see 1, 2, 3, 4. 4 of these candles on the weekly is literally just this one whole monthly candle. That's how you zoom in on price, and that's how you're able to predict moves because moves happen first on the smaller time frames before it happens on the big one, because the markets work in a fractal nature. You understand? So when I said mark the most recent resistance, I mean the most recent one to current price. So not this one or this one, yeah, but this one here, that's the most recent one. This is the most recent resistance that's relative to the nearest current price, which is at $1.17.530. So that's the most recent resistance. And because it's already at our monthly resistance, all you have to do is just put monthly/weekly resistance. There's no point putting 2 lines. It'll just make your chart look messy. And you'll just do the same shit for support. You get me? So on the support level is the most recent bearish close and bullish open. You get me? So the one that's most relevant to price. And you just do the same shit. So you put weekly support for weekly support range. So this is important because support and resistance levels are levels of volume. Volume as in where people are in the market ready to buy and sell. You buy low, sell high. So you buy You buy at support level, which is low, and you sell at resistance, which is high. But obviously it's more complicated than that, but we'll get straight into it. Don't watch that, I got you. So now that you found your range between recent support and recent resistance, yeah, you need to find your level of high volume, which is essentially where the market is going to go to next. So these high volume levels are levels of pullbacks and levels of in volume. That's where the market is attracted to. The markets will go to there next. So imbalance as in market inefficiency. So whenever you see a gap between candlestick wicks or whatever these ICT dons call it, fair value gaps or whatnot, it's nonsense. It's just imbalance. That's all it is. ICT is just rebranded price action. All of it is price action. So you mark that level, and I just put WIMB, so weekly imbalance, because it's correlated to the weekly time frame. And I mark these arrows to indicate the direction of where the volume is going to be pushing price when price hits this level. This way, it makes it psychologically easier for you to understand when you're on a lower time frame, because these levels are levels of high volume, which means there's a load of buyers, so buy limit orders waiting to be filled in at that price, or waiting to buy there to push price up, in turn pumping the value of the currency pair or asset you are trying to trade. So if you enter at those levels in confluence with the market direction, you are going to catch a trade, believe me. And because price always returns to fill these inefficiencies, these gaps in the market, yeah, you can essentially sell from where the price is all the way down to this gap, catching a short trade. So in theory, selling the currency pair or asset as it depreciates in price, because you already know price fills these gaps, so it's going to go down. So that's how you already have an insight of where price is heading to. So the other level of volumes which I mark are pullback levels, which are essentially breakouts of the first resistance, you understand? So because this has already been pulled back, I just mark it with an X so that I know, okay, it's not going to pull back again to that level. It's already happened. So the terminology behind pullbacks is basically what I just said about the imbalances, the inefficiencies happening on a smaller time frame that you can't see on the bigger time frame. So as you can see on the daily time frame compared to the weekly, we have the inefficiency. Price came back, tapped it before moving up because there was a imbalance right there. But on the higher time frame, the weekly, it's a pullback. You know what I'm saying? Pullbacks are just inefficiencies getting filled on a smaller time frame. You understand? So on a daily time frame, which I explained about the fractal nature of the markets, it's literally just a weekly candle broken down into 7 segments, because there are 7 days in a week. So 7 candles is one whole week's candle. So this whole candle here, yeah, the most recent candle here, that's usually the whole week what's been. So that's just one daily candle because it's a Monday. But before that, you would get 7 candles, and that would be that one big weekly candle. So now that you understand the fractal metrics of price and price action on the charts, yeah, you want to replicate what you just done on the monthly and the weekly time frame on the daily time frame. So essentially finding your daily trading range, which is your most recent daily support and your most recent daily resistance. And then you find your levels of high volume, so imbalance levels and pullback levels. And then, yeah, all the way, copy that all the way down to every time frame below the daily. And that's how you find each range. Another thing, you want to be marking previous daily highs too. So especially if you brought the previous daily highs, just so that you know when you're on a smaller time frame with wicked daily highs, we're most likely going to go down, because when you wick the highs, we go back and wick previous lows. That's how it happens, and so I always do like that DHS daily highs, and I put an X if it's already wicked it, and that's how you really annotate the charts. You understand? So now that we've analyzed the daily time frame, we go down to the 4-hour. The 4-hour is literally just a daily time frame broken down in 4-hour segments. You understand? So there's 24 hours in a day. So that means there's 6 4-hour candles in one daily candle. So that's how you really zoom in on price to see predictable price moves before it happens on the daily. So we do the same process. We mark the daily previous 4-hour resistance, previous 4-hour support, and areas of volume, and flipping previous 4-hour highs. Same process all the way down to every time frame. So this is what your 4-hour analysis should look like once annotated. You've got the 4-hour resistance, recent resistance, you've got the recent 4-hour support, and now we're going to annotate the most recent level of high volume, so 4-hour pullback. Because it's already happened, we put an X, so we already know it's already happened. Like the buyers have already bought off that move once it's already been tapped in, so that doesn't matter. And this area is not an imbalance yet because the 4-hour candle has not closed yet, you understand? So zooming down on a 1-hour time frame using the same fractal principles, yeah. Each candle represents 1 hour of price action, yeah. So 4 1-hour candles is 1 4-hour candle. You get me? So that's you zooming down on price, seeing exactly what's been going on in those 4-hour bars, in those daily bars, and on a 1-hour flipping scale, that fractal scale. You get me? But before all of that, zoom to the left to see any areas of volume of, you know what I'm saying. So I look for imbalance on the left to see where price had strong enough conviction to push us down or up. So on the left, there's an imbalance right there that I'd mark. So 1 hour imbalance. So I already know, cool, we're inside this imbalance zone. So that means there's loads of sellers waiting to sell or trying to sell at that zone. So there's no point buying, or what you want to call it, a supply zone if you trade SMC, or you know what I'm saying. But yeah, because it's already happened, I just mark it with an X. Already know, okay, cool, the sellers have already been active. They're trying to sell. And as you can see from the top wick, yeah, it's rejecting because the sellers are active on that line, on that zone, on that level. So we already know price is pulling down. And plus we've wicked daily highs. So that's already enough conviction telling us that we're going down with the daily as well. So we know that we're going down. So if you open a sessions indicator, we know this whole move is going to be a downwards move. So we're trying to trade inside this entire session on the 1 hour time frame. You understand? So our whole trade direction is bearish. So we're going down with this session. So that's how I catch my moves in the session, using all those confluences, all those factors telling me, giving me enough conviction, giving me enough confirmation of the direction of the market inside my trading session, which is the previous sessions price action. So London session, obviously right now it's 1 o'clock, it's New York session, so I'm only trading the price action of what happened previous session. So previous session went up, it hit the 1 hour imbalance, sellers. It hit the 4 hour resistance, sellers. We already wicked daily highs, sellers. We are going down. That's my conviction. So now we just need to find our setup entries to go down with the market, and that's the trade. That's the system, you get me? So we've got our reasons for why price is going down. So now we need to find our reasons for where prices look most likely to head to. And as we can see, we've got a 1 hour imbalance right there. Inefficiency. Price always feels inefficiency. So that's enough conviction that price is going to go down too, because it's going to head to the inefficiency to refill it, because there's people waiting to buy there, thinking that the market's going to continue higher. So they know that it's going to refill that zone. So they're just thinking, cool, I'm going to wait for price to hit that zone and it's going to bounce back right up and continue the bullish move because they think it's bullish. But realistically, it's bearish, you get me? Because why? Because there's equal highs right there, equal lows, equal lows as in people's stop losses. So you see how price pulled back, people would enter at that pullback and they would put their stop loss below those candles there at the pullback level. Yeah, the blue candle before the bullish push up. So those are equal lows right here. And those equal lows are institutional traps, because people are going to think, oh, cool, there's an imbalance right there on top of that blue candle. Let me enter on that zone. And where they're going to put their stop losses? Underneath those lows. So those lows are, you don't want to be entering at equal lows, especially if there's an imbalance level underneath those equal lows. Brother, you're asking to get smoked. You never ever enter, yeah, below or above equal lows, because that's where everyone's stop losses is at. Because they think this bullish push is going to come back, feel this inefficiency, but realistically it's going to push through the imbalance down to the equal lows, take everyone out, and then continue to move or whatever it's going to do. So never ever enter if you see equal lows. Wait for the equal lows liquidity to get swept, and then you enter and catch the move, because price is attracted to two things: liquidity and volume. You get me? Liquidity is where everyone's money is at on the line, and volume is where everyone's trying to buy and sell. So if you're entering at bait spots like equal highs, equal lows, brother, the big dogs are going to see this and they're going to come take your piece, bro. That's the game, bro. You understand? So your job is not to go against them. Your job is to catch the trend with them. So you need to follow their footprints and follow their footsteps and catch the move with them, piggyback in their big moves. Trust me, your little 10K, your little one rack is not going to do nothing to the market. You see these candles represent millions, bro. Millions getting printed. And who's got the power to do that? Banks, institutions, hedge funds, all of them. That's why it's called institutional order flow. That's what this system's all about. You're following the institutional's footsteps. So you don't go against them, you go with them, in flow with them. If they're selling, you wait for them to take liquidity, and when they show you enough confirmations that they're going to dump, you jump in with them, you catch the ride with them, you catch the trend. That's the game. You get me? You're not trying to solve the markets. You're trying to catch your piece of the pie. You understand? And my system and my strategy that I've been developing for so long, brother, yeah, through losses and experience and everything, yeah, it helps you navigate through the charts properly, bro. And you can see their footsteps, you can see their footprints, you see where everyone's getting taken out, you see where everyone's catching profits, you see the whole thing like a video game, bro. And then you catch the ride with them. You understand? Okay, so now that we have our bias and our confirmation that it's a sell day today, yeah, so we're selling,
we need to start marking our entry analysis. You understand? So we start on a 15-minute time frame, and then we look for the first swing point. So swing point one. So swing point one is the start of the bullish move, the entire move. So the lowest point of the move, that's swing point one. So because we're on the 15-minute time frame, each candle opens every 15 minutes. We want to catch a quick trade. It's 15-minute swing point one, and then swing point two would be the very tip, so the top of the move before it reverses. So because the 1 hour highs have not been wicked yet, like there's no X on that mark here, we know that's not a valid swing point two for 15 minutes, because we know it's going to come with the 1 hour highs, and then when it reverses from that 1 hour highs that got wicked, then that will be a valid swing point two. So this game, you got to be patient as well for your setups. You can't just force a setup. You will get liquidated easily, and that's when they take your P's, like, bro, institutional order flow is the way, but they set a lot of fucking traps in this game, bro. You got to be careful. So we're waiting for this high to get wicked. The low's already been wicked on the 1 hour. So now we're waiting for the price to go back up, wick the highs. And when it wicks the highs and shows the reversal confirmations, that's when we know, cool, swing point two on a 15-minute is confirmed. And you need to have swing point two. And swing point two is essentially what leads us into our first trade of the system. You get me? First out of three. You get me? We've already got confirmation that's going to reverse, because this candlestick right here, yeah, is a shooting star candlestick. So when you learn about candlestick patterns, you will know which candlesticks are the ones that actually give you confirmation that's going to reverse. So this candlestick, yeah, this long one with the long wick, it has a long rejection. Rejection means that there's too much solid strength. So price tried to go up, but it got pushed right back down. And how do we know that? Because price hit a level of high volume. So 4 hour resistance. So resistance, people sell at resistances. So it hit resistances, hella sellers trying to push the price down. And the higher the time frame the level is, the stronger the level is. So a 1 minute resistance is no match for 4 hour resistance, because the big boys, they enter on a higher time frame because they're swing traders. So investors, brokerage firms, institutions, they enter at these big levels because they're trying to target big moves. 4 hour people, they don't take profit at 15-minute levels, bro. That's too tiny for them. So that's how you know they're strong. So yeah, so we're at 4 hour resistance, very strong level, huge sellers. 1 hour imbalance, very strong level, huge sellers, and daily highs. So when highs get wicked, we go wick the lows. So we are in the perfect place because we're selling. So we have too much confirmation the market's going to go down. So we're with the big boys. So we got the big boys on the 4 hour backing us. We got the 1 hour imbalance levels backing us, and the daily highs backing us. There's no reason we should be buying. You don't buy high. You sell high, buy low. You understand? That's the principles. The trend is your friend till the bend at the end. Remember that. So right now it's trending bullish, but because of these levels blocking the move, it's going to bend. So there's no reason to you to be buying right now. Sell, sell, sell. All right, cool. So I've explained to you how every session has swing points where the session opens. Obviously, London opened down here, so that's swing point one, which leads to swing point two, which will be around up here. You get me? That's where it would drop, and it will drop all the way down to swing point three, which is a grab on liquidity from the previous low, which will be down here. You get me? So from here, you open your toolbox and you get the line tool and you draw the most recent low. So the most recent low, yeah, that will be your liquidity pool, and so obviously people that are buying the pullback, they're gonna have their stop losses underneath that low. So the market's gonna liquidate their low before continuing. You get me? Creating our swing point three. But essentially, this break of liquidity on the lows is gonna be your entry point, like your trigger telling you, yo, it's time to enter for your second entry. So you wanna put an alert on this zone, and then from there, you just leave the market alone. This is after swing point two's form. You don't want to do anything else unless you want to enter from swing point two to this zone, because you know it's going to come. So that's already a predictable move. So you know, cool, I can sell from there to the liquidity, and yeah, that's guaranteed going to happen. So you've already got your little fix. That's one of my that's my first strategy as well in this system. So yeah, from here, you just leave the market alone. Once you've got that annotated, you've got everything set up, yeah, and you've got your alert set, yeah, leave it alone. Your phone will alert you when it's time to actually be active. Look for your trade setup in it, because when it crosses that line, your alert will come. And another confirmation that swing point two has not formed yet. As we can see on the 5 minute, we have an inducement candle here. So an inducement candle is a candle with no top wick. That's a trap as well. It's an institutional trap. They set these traps to trick people into entering and taking their money because they're going to get liquidated. So the inducement, yeah, it's going to get ripped. Oh, I shouldn't even say that's big TikTok. It's going to get right up the arse. You get me? Like, I was saying that, yeah, man. So price is most likely gonna break through here, create swing point two on the 15 minute, and then you can mark it as 15-minute swing point two, and then you wait for price to come all the way down, liquidate the lows from the pullback traders, yeah, or the breakout trader that try to break the highs. they're going to have their stop loss wicked, and then it's going to create swing point 3 underneath the liquidity pool, whatnot, and then that's your second entry on the system. Yeah, you can trade from there to swing point 4. You will know when it's swing point 4 if you see equal highs at the top. Only target the equal highs because that's the seller's stop losses where they try to short the market, or you target the imbalance that the market left. Another good way to track where you're actually going with the order flow, yeah, once all the swing points are confirmed, you just connect the dots from swing point 1 to swing point 2, then 3, then 4, you get me? This way, it's just easier on the eyes, innit, to actually know where the market direction is. So only do it once swing points are confirmed. So once you've got a confirmed swing point 2, you do it, and then you do it to swing point 3 once that's confirmed, and then swing point 4, and then, yeah, and then the next, it's just straight down, bro. Trust me, that's the plan. And this would be swing point 4's move. Look at that fat move. Ooh, sexy, blood. Yeah. That would be swing point 4's move. You'll be catching the very tip of the flipping reversal. All the look, boom. What did I tell you? 5-minute inducement. It's got wicked. Boom. Watch. And then it's gonna create swing point 2 up there, bro. Trust me. I've done this 1,000 times, bro. My eyes are trained for this shit, bro. So boom, 5-minute inducement got wicked, so we marked that with an X. So that just tells us that sellers that try to short that move right there, they got packed off, boom, liquidated. And then now we just wait for swing point 2 to form. Literally, you just gotta wait. This is a waiting game, brother. But when the time hits, it hits, bro. So yeah. So yeah, 15-minute inducement, you got wicked nicely. 1 hour highs is about to get wicked. And that's where swing point 2 is going to form on our 15-minute time frame. There we go, boom, you got wicked. Now we are now at swing point 2, we can mark it, it's valid, and now we just wait for a close below. And yeah, as it goes, it's only valid if it closes below. So we've got 8 minutes left on the clock if you look on the right. And then yeah, but 1 hour has got wicked, mark that off, boom, they're packed off. And then yeah, swing point 2, nice. Okay, now that we have a real swing point 2, we can finally connect the dots from swing point 1 to swing point 2 using our wireframe. So I just call it front nose, but yeah. And then here's another trick, yeah. I'm gonna teach you, innit, how to fucking see where the actual liquidity point really is, like, or which candle actually confirms the reversal. I'm gonna show you now. All right, cool. So you get your line tool, you draw a trend line in confluence with the trend, and then you use do it in red. Obviously, it's easier to see, trust me. And then you use the wireframe tool, the yellow one, and mark it all the way down to where the liquidity point is, or the point where swing point 3 would ideologically be. You get me? Like realistically where it'd be. And then yeah. And yeah, as soon as price crosses the cross point between the red and the yellow line, that marks, yeah, it's just a visual representation of the change of character. So the change in momentum. So obviously now it's bullish, but as soon as price closes below this or crosses the candle that's inside that X, that's the candle of the reversal point. So from there, it's reversed, bro. It's no longer bullish, it's bearish. Now we're in a bearish structure. You get me? Bearish market. That's the trick that I learned flipping just through intuition. You get me? Just trust me. The brain is an amazing thing. Trust me, especially when you use your eyes and your head, bro. It's ultimate pattern recognition, bro. Believe me. So yeah, as soon as price crosses this area, the candlestick that's on this X is the candlestick that reversed the actual move. Believe me. So yeah, from here, because swing point 2 is confirmed, you can literally put a sell order right here to the liquidity point, because you know price is heading there anyways to liquidate the lows, or to swing point 3. But if you're really brave, you got big balls, yeah, fucking sell it all the way down to the fucking session lows. But you never know, but obviously play it safe, innit? So obviously only take it to an area when you know it's confirmed it's gonna go. So we all know it's gonna go to the liquidity point. That's how price moves. So you'd put a sell, like a sell limit or a sell stop at a 5-minute or a 1-minute time frame, you get me? So if you was observant, you could have entered that sell stop right there, literally right there, or you could have just waited for a supply zone or an imbalance for price to come back and tap in it, just like it did right there. It dropped back down, tapped it, and watch, it's just gonna drop nice all the way to the liquidity point, swing point 3's point. You get me? So that's literally the first strategy out of 3 inside this one system that you can trade in one session. So you can catch 3 trades in one whole session, bro. The first one gives you the smallest one. The second one gives you another one. But the third strategy, the proper one, bro, it gives you the fattest move because you've caught the cheapest price possible for max profit. Cheapest, I don't mean in actual price, I mean cheapest as in you've caught it on the 1-minute time frame. The smallest time frame you can go down to, yeah, all the way down. So you're getting a fat X return, bro. You're getting fat RR. You're catching big X returns, bro. So this is a 2X, 2.4X, but When you catch swing point four, brother, boy, different level, bro. Trust me, you're gonna see live, like no back test, no nothing. This is real market conditions. This is live market conditions, bro. This is what's happening right now in euro dollar. Right now, see, it's starting to drop already. Boom. That's the first trade you would have caught. You understand? Yeah, I'm gonna speed it up a bit now, but just watch. I didn't move no positions. Look, I didn't change my entry or my stop loss. It's still going the way it's going. I put it to the 50-minute liquidity point. Watch, it's gonna go straight down, wicket, because that's where swing point three is gonna be, which is our entry trigger. And just watch, boom, hit, take profit. Nice 2x, you get me, 2.8x, you get me, you're nice, bro. I told you, bro, this system is very repeatable. It happens every single day, every single time. That's the first trade in the system. You got 2 more to catch. So yeah, the pullback, the trend line, the breakout traders that try buy on that price, boom, they got packed off because their liquidity was right there. So yeah, swing point three finally confirmed by 50-minute bullish close with a rejection candle. So we mark this as 50-minute SP3 for swing point three. Yeah, from now we can catch a trade from 50-minute swing point three to swing point four. So obviously zooming on a 1 minute time frame for the cheapest price, you look for an imbalance to get filled, and then you just put your buy limit order right there, waiting for price to come tag you in to catch the trade from swing point three to swing point four, and that would be your second trade in this system confirmed. And you want to play it safe and only target the opposing level of volume. So at the 5 minute imbalance, so you never know, the swing point four could react off that, but yeah, that's what you want to target on swing point three. And then yeah, that's your second trade from the system. And then swing point four, which will be your monster trade, your killer trade with a killer RR 5x, you get me, that will be swing point four, you get me, that will be your final trade. And that's 3 trades in one system, and you're going to see them happen right now. So obviously we want to see who's protecting our stop loss. So we got the 5 minute support right there, which hold more volume than the 1 minute. Obviously the 5 minute buyers, they're more stronger than the 1 minute. So there we go. So we're good. Our stop loss is good. Now we just wait for price to do its thing and push us straight through to swing point four from swing point three, catching us in. Right now it's on our actual entry point. So boom, now we're in profit. And then yeah, we're good. We also got the 1 minute buyers as well, creating a 1 minute support right there. So we've got literally enough buyers to protect us on our entry. You get me? So we're nice, bro. But yeah, I'm just gonna fast forward the video a bit more. But yo, this is what real trading is about, bro. Catching moves before they happen, making your profit. This is real trading, bro. Nothing else, bro. Believe me, bro. But yeah, it's pumping, we're nice, bro. Currently up 2x move, but this move is a 4x move. 4x. But yeah, 4x move, and yeah, we're gonna catch it to the opposing level of volume, which we marked as a 5 minute imbalance. And then yeah, man, bang on with it. There's a 15-minute imbalance right here, so that gives us more conviction that price is going to return back to that level after hitting swing point four. So we already know we're going to go down anyway. We've got too much, you know what I'm saying? Like, come on, man. Currently up 4x as well. Boom, 4.74, that was original take profit level. But just watch and learn. Switching to the 30-minute time frame, we've got a 30-minute support right there, which is good. Because now we've got the 30-minute buyers that stepped in. They've pumped up the flipping price as well, and plus they protected our stop loss. There's no way the 1 minute guys are fucking breaking through 30 minutes and 15 minutes, bro. No way, bro. We're nice, bro. Stop loss is fully protected. We're good. You can break even if you want, but yo, we're nice. We got more buyers, more people pushing the price up, and we've caught it at the 1 minute before it happened on any other time frame. That's the power of the 1 minute. It happens before anything. So you're catching moves first before anyone else. So you can call dips and flipping pumps before anyone else because you're on a 1 minute time frame, 1 minute super scout. But yeah, I turned the session indicator off. It was a bit annoying, but this is better now. I can see it more clearer. But yeah, man, just watch and learn. 5 minute imbalance right there underneath the 15. See how you can see people try to sell the 15-minute imbalance, pushing price down, but kept pushing because why? There's equal highs above the 5 minute imbalance. What did I tell you about equal highs? Liquidity. Never ever sell below equal highs and never buy above equal lows. That's where everyone's stop losses are at, and the institutions and shit, they can see that. You understand? They know that your money's there. They're going to try to take it. Look what happened. Boom, take profit. Now they're going to get liquidated. So boom, there you go, take profit. Equal highs got wicked. Sellers try short the market, but they enter that equal highs. Boom, obviously we caught it at 4.79. That's our original take profit, but I was just showing you how much we could have caught, which would have been a 6R, a 6x move if we targeted the equal highs, if we didn't want to play it safe. But there you go. Equal highs, prime example. Never sell below equal highs, never buy above equal lows. Liquidity. Everyone can see where your money's at. So Bay areas, don't even think about it. But yeah, that swing point three trade done. Now we're going to move on to swing point four. I'm explaining to you how to catch swing point four in this system. That's the third trade out of 3 in this entire system. Watch and learn. So on swing point 4, you just wait for reversal confirmation after all the highs have been wicked, and then you can enter a limit order off the imbalance level that's about to print. But because it's 1 minute, it happens super quick, and so you don't have time to actually wait for the candle to close. You just put the order, trust me. But if it misses you, it misses you. If it doesn't tag you in, it doesn't tag you in. But it doesn't matter, it will come back and tag you in. But if it doesn't do that, then that's it. The setup's not valid for you. You get me? Come back another day. You get me? It's part of the game. You get me? You're not always gonna catch a setup, but when you catch it, you're catching fat moves. You get me? So that's how it works. You just wait for the lows to get wicked, and then it will tag you in at 1 minute swing point 4. You get me? And this move here, because you caught it on the 1 minute time frame, so the cheapest possible price. You get me? You've got the biggest risk to reward, so you got the biggest X. So right now, you place your stop loss and you want to place your TP either at the session lows, because you're going to catch the entire session anyways, or at the 1 hour imbalance level that started the bullish move. You get me? So yeah, there you go. That's the source. Yeah, and from swing point 3 to swing point 4, as you can see on the wireframe, bro, once you've entered at the 1 minute for the cheapest fucking price possible, bro, I mean the cheapest price as in like you've entered before everyone else. Like, look at where you've entered, bro. Look at that demand zone. I ain't even entered yet, but it's gonna come tag me in. Just watch. That's the cheapest price you can get it at, bro. It's not gonna go any higher than that unless it wicks the highs. And yeah, but realistically, on a clean, safe setup, yeah, that's the cheapest price you can get the reversal for. So you're calling the dip before anyone else sees it, because you've done it on the 1 minute. And how'd you do that? By following the system, the order flow. Learning institutional order flow in confluence with supply and demand and price action, bro, that's the game. You understand? So as you can see here, it tried tagging me in before, but it dipped. Literally what I'm saying, the game plays with your emotions, bro. But I trust my system, I trust my analysis, I know it to the T, because it's what I trade every day. So look, it's gonna come back for me. Yeah, it's gonna tag me right in before actually doing the distribution, before actually dropping. Look, boom, tagged in the trade. We're on £0. As soon as it crosses the grey highlight, we're on flipping profit. You understand? Boom, there we go. Trust me. Like, brother, this is my bread and butter in life, bro. Like, I know this game like the back of my hand, bro. You've watched me call these flipping shots before they happen. You've watched me predict every move as of so far right now, bro. Like, I don't. This ain't back testing. This ain't replay. This is live conditions. Watch the time as it goes. Like, bro, I don't use bots or indicators or signals or puts or flipping tips, bro. This is all through experience and intuition, bro. No RSI indicators, no ADX indicators, no EMA crossovers, just use my head, bro. Pure price action, bro. Straight price action, bro. When you learn how to read price, you can learn candlestick patterns. You trust me, bro. You just need to learn the game. That's the only way, bro. Like, look how much is dropping already, bro. Like, trust me, bro. The 1 hour imbalance, that's the level you want to be taking profit. You understand? But if you're confident that it's going to clear session lows, then you take it to swing point 1, 15-minute swing point 1. But you take profit at 1 hour imbalance because of the high level of volume that's going to be there, which could essentially push the market up. You get me? So yeah, bro, 1 hour imbalance, that's the main TP. If it breaks that, then you can scale down. Boom, look at that, still dumping, bro. Currently at a 5x, bro. Bro, you know how hard it is to catch a 5x move, bro? Guys are catching 1 to 2s, 1 to 3s to call it safe, bro. What the fuck is that, brother? Boom, 7 p.m. take profit 1 at the 1 hour imbalance where we would have got out. It hit 10x. You get me, bro? Nicely, bro. Bro, I'm saying, bro, come on, man. But yeah, that was yesterday's New York session, trading London sessions price action. TP1 got smacked at 10x, but obviously I was aiming for London lows. Fuck yeah, but obviously price reversed at the TP1 because, you know why? Because there's high impact news today. Yeah, high impact news fucked us all up. I can't lie, bro. That's what I tell you. Never trade on red days. Flames, anything can happen. You can have a you set up and anything can happen, bro. Today was a red day. I should have checked the calendar, but man, I was one of them ones. I got out of break even anyway, so I lost no bread, so it's all pattern. But if it wasn't for the high impact news today, if it was a clear day today, it would have hit session lows like it always does. But yeah, news, avoid news at all costs. Anything can happen. But there you go, prime example.